All right, Candle Range Theory Trader back with an update on the candle, the 9 a.m. continuation candle for Euro CAD and Pound CAD. That's continuation of part one that was shot earlier. So I did get stopped out a couple times on this because of, it just spiked up and then it came back down. So I did get a profit off of Pound CAD more so than Euro CAD. But so let's take a look at what happened though. Pound CAD was the better one, so we'll go there first. So let's remember that. Let's just do a quick top down. So remember, we were operating off of a daily candle range theory. With it always starts with identifying candle two. Okay, candle two always makes the high of the week. So you have to define your range. So the range is here, like that. Okay, then candle two is this one right here, which was Wednesday, right? As long as candle two holds, and if price is below the range, then I got a short bias on that. So this one here was an inside day, which was Thursday. And sometimes when there's an inside day, the move doesn't come until later, which is that's just what happened here. So that comes with experience, the chart time, stuff like that. But the main thing I want you to understand is that you have to structure your trading in a way that makes sense to you. And the way I do that is candle range theory, which means that I operate on the belief that, okay, every candle opens at a specific time. So I want to try to trade around that open price of whatever candle I'm looking at. And in this case, it was 9 a.m. because I like the 8-hour chart. So I'm trading at 5 p.m., very rarely 1 a.m. because I'm asleep. Okay, I'm on the East Coast. And then at 9 a.m. So because I had a short bias, I just wanted to see if I can catch a short in the 9 a.m. candle. So I hope that makes sense. Okay, because again, 8 hours off the daily. So it's a daily candle range theory, and I'm looking for at 8-hour 9 a.m. short. So that's how I broke that down. So this was the 9 a.m. candle right here. It opened, it spiked up, and then started coming down. So now we drop down to the 5 minute to see what happened or what is happening. I'm already out of this trade. I went ahead and took profit. I was just waiting for the top. I wasn't expecting it to go all the way up here, but it did. And then eventually came down. So very easy 1-to-1. I just hopped in right after the first fair value gap did appear. It was an easy 1-to-1. I did hold for a little more. But already it's dropped, what is this, 50 pips from this entry here. Like I said, I'm not in it anymore, but had I still been in it, I would have been 50 pips. But another main thing too was the average true range indicator that did let me know that when the candle opened, one thing I like seeing is I like using this volatility and indicator, which means it's the average true range, the red line. If the red line is above the average, the 20 period average here, that tells me that there could be volatility in the trade and you're going to see bigger moves. And that did happen here where it went up and then it went all the way down. So as it approached the open price of the candle, that's why I went ahead and just got out for the profit that I did get. But yeah, this is definitely ATR above average. Definitely lets me know that there could be life in the trade. From then, it's just a matter of managing risk and make sure you don't blow an account if the candle chooses to open and go up and then go down. Every candle won't be a straight drop as soon as you get in. There could be some retracing that takes place before the move you want to see plays out. So as long as the candle stays inside of the range, right? This range high, as long as it's in there, then the bias is safe in my mind, at least. Okay. If once it gets above it, then it's kind of like, you got to be careful. Okay. And that's even happening with EuroCAD because EuroCAD was kind of dancing around the range top and it still is. It's there right now. So in theory, I can get into this trade right now if I wanted to. Let me see if there's a gap here. But a better entry would be if there were a gap that would appear inside the range is my point. Okay, because we do have momentum to the downside. Obviously, let me see, the fair value gaps are forming right there. So if I wanted to be risky and take an entry right here, I could off of that high and use that stop loss. Expecting price to stay inside the range, but it could happen. It might not happen. I don't know. Okay, because I'm not you just react to what you see. So, but the volatility is there. Let me just go back real quick to the ATR indicator. Yeah, volatility was there. Price is pretty much right at the ATR line. It's like crossed over just a little bit there, but it has been higher than usual. So I would feel fine taking this trade right now if I wanted to, but since I already got pound CAD here, I'm not going to overdo it. But that's how the trade shook out. This would have been a good pound CAD was the better one though for the day. This was the better trade right here. catching that momentum to the downside. So hopefully you got something out of that. I appreciate you watching, and thanks for your time and attention. Have a great day.